Hey, fellow investors and fellow stock guardians. It's Monday, March 1st, 2021. I'm Hoda, co-founder and CEO of StockCard, reporting to you from a pretty green stock market. The stock market indices had an excellent start to the week and the month of March. All three ended Monday in the green, with the Nasdaq index taking the lead with more than 3% daily gain. The approval of the $1.9 trillion economic stimulus package and the new COVID-19 vaccine by Johnson & Johnson brought back excitement and hope to the market. Before we talk about the winners and losers of the day, let me talk about Warren Buffett's annual letter. The report came out this weekend, and at the first glance, it's one of the best Uncle Warren has written, in my opinion. He talks about how the low yield in the global bond market has changed the investment industry's fundamentals. The treasury yield has fallen by 94% between September of 1981 and today. Such a drop in a safe source of income for large institutional investors has changed the stock market quite drastically. Understanding that context helps us realize why we have seen a long-lasting bull market over the last decade, regardless of the COVID-19 dip in the March of last year. As they say, context matters, and the 94% drop in the treasury yield has significantly changed the stock market context by changing how large money managers allocate their money. If you have time to read Warren Buffett's letter, it's full of good ideas. I put a link in the show notes so that you can have access to this report quite easily. Now on to today's winner stock. Since the Nasdaq index jumped more than 3%, high-flyer tech stocks had quite a day. From Etsy to Tesla, Redfin and Fastly, the stocks were up a few percentages on Monday. The one stock that grabbed my attention was Zoom. We know that after an outstanding 2020, investors had lost some excitement about Zoom. The stock fell from its all-time high of 588 per share to mid-300 between September 2020 and January 2021. Today, however, the stock price jumped more than 19% after the company released its latest quarterly earnings report and forecasted higher than expected full-year income and earnings. Investors are warming to the idea that Zoom can continue to grow beyond the pandemic. I own a few shares of Zoom that I purchased when the stock dropped to mid-300 and 400. It pays off to take advantage of the market's short-term overreactions, especially if you do your due diligence and invest in companies that have the potential to continue to grow. The loser stock of the day is a company called OnTrack. I paid attention to it since I own a few shares, and the stock lost almost half of its value today. OnTrack helps patients stick to their healthcare regimen using AI and personalized notifications and a topic that is called behavioral science. Unfortunately, today it announced the company's largest customer is terminating its contract with OnTrack. This is either an excellent opportunity to buy more shares or an indicator of more troubles ahead. For now, I add the stock to my watch list and wait for the quarterly earnings full report on March 9th. I'll keep you posted on the results when we know more. Don't forget to get your earnings calendar for the week by visiting the calendar tab on the Discover page on your StockCard account. As always, if you'd like to give a StockCard a try, research as many stocks as you want and receive updates about the stocks and portfolios you're following, sign up for a 14-day free trial with promo code ROLLWITHOURCEO, all lowercase and in one word. That's it for today. If you like these quick market recap reports directly from my daily stock market research, please like and subscribe and share with your fellow investors. See you tomorrow.